Hello traders, this is Michael coming to you from GammaEdge on Tuesday, June 3rd with our pre-market morning strategy and briefing session. This pre-market prep should take roughly about 5 minutes as we go through our market trend model, key levels of reference for the day, as well as the structure, and then our thesis or trading plan for the day. So we always start with our market trend model. Here at GammaEdge. This market trend model is based on the tick index. You can research that. But the quick takeaway is it is buying versus selling between market participants and the overall market. Our key intraday indication is this bolded white cumulative tick. If it is rising, then more buyers are in the market than sellers. And then our colored ribbon here is our longer look back period. This is how we position our longer term money for an overall trend. Again, the red above cyan with the positive slope indicates that buyers are in control on a longer term time frame. Heading up to our breadth indicator, new highs versus new lows. Obviously the green, more stocks are being bought than sold, and rising is an indication that obviously more buyers are in the market than sellers. And then our filtered cumulative tick plus 1,000 minus 1,000 larger block institutional orders continue to rise in the afternoon yesterday, indicating that institutions and larger market participants were in accumulation mode heading into the afternoon. Again, we want to see this bolded CT continue to rise in a positive slope type fashion, indicating that buyers are in control of the overall market after this long consolidation period that we've been discussing for the past few days. Moving on to the SPX, this is our cruise ship. Longer term expiries here as indicated by our tiles over here, call dominated above and below spot price, so the structure is bullish, and any pullback in the overall market would be an opportunity to get involved. Again, this is our 40,000 foot view. 6,000 above continues to be that key level that market participants are speculating above. Heading on the SPXP, these contracts turn over a little bit more quickly. As you can see, these are daily to weekly expiries. We follow the SPX complex because it's the largest notional value that we can look at structure and determine sentiment. Call dominated above and below spot price is denoted by the green box as negative or a positive net delta. Today is an interesting day as the DEX and GEX transition are basically overlaid each other. So again, that will be a key pullback area within the overall structure. This could be an opportunity to get involved in the market on any pullback. If we're above the transition, if we're below the transition, we might anticipate a little bit more weakness down towards that 5,900 level as outlined with our shading there. So we'll head on to the SPX P0DTE. Obviously, this is the intraday expiry. We have our key levels outlaid. Our drunken sailor range is this box right here. This is can be a highly volatile area back and forth with extreme choppiness. So you'll notice that is basically 59.55 to 59.60 down towards that lower area 59.10, and couldn't even drop it down to 5900. So again, probably stuck within this overall range unless we see a significant amount of speculation in either direction. You need to see call speculation to the upside to get above this 59.55, 59.60, and that would put us in a more advantageous area for a larger rise. And then below transition, we look to be a little bit more weak. We see this double strike here at 59.10 and 59.15. That will most likely be extremely supportive on any pullback here, as well as this double strike here at 59.55 and 59.60. Most likely, I would say this is the IC that's in place for the day, anticipating that we're going to be within this overall range and stuck within this structure unless we see a significant amount of speculation either to the upside or the downside. Call dominated again above and below spot price, so any pullback should be supportive. But also note that total OI is 178,203, very low, but as in historically we've seen Tuesdays and Thursdays are a lower OI, and their expected move is 0.76%, so a little bit lower. Moving on to the delta balance history, again pegged at 1. This is indicating that call speculators are in overall control, and the right-hand plane, left-hand plane that are separated of our options complex are above 0, again indicating that call speculators are in control of the overall structure. SPXP, sorry about this, GEX ratio, SPX noted that we talked about this yesterday, consolidation of price action, and we're going to see this resolve in either one of two ways. The GEX ratio, which is our put call ratio, but it's a better because we add a time component, which is gamma, would continue to rise, indicating short dated call gamma was going into the call, or was going into the overall options complex, would probably produce a rise in price action, or we'd see the spot price fall to come down as the GEX ratio was moving sideways. So as of now, we see the GEX ratio increasing, so short-term call speculation is heading into the overall complex. The SPX net stack command, this is our highest sensitivity strikes for today. You'll note in the money calls below us, again, this is supportive on the net delta down towards that 59.50, which is the bottom of drunken sailor range, and to the upside, the out of the money calls at 59.55, 59.60 on the charm. Again, 59.55 right-hand plane strike will most likely be that overall ceiling unless we see a significant amount of out-of-the-money call speculation come in. So thesis for today is pullbacks are viable within an overall bullish structure down towards the bottom of our drunken sailor range, or that double strike of 59.15 to 59.10. And to the upside, most likely we'll see a cap 59.55, 59.60 unless we see a large amount of call speculation to the upside. So hopefully that helps for the day. Thanks everybody, and we'll see you later.